Good afternoon, everyone. Futures Barizio here. It is 1:30 p.m. on Friday, March 13th. Yes, another Friday the 13th. I think that's the second one in like a month or so. I don't know if that means anything, but just weird. Usually you get a couple of those a year. So, anyways, for those of you that are into that, it is Friday the 13th. So, I just want to jump in here, make a quick video. We're going to spend most of the time on Forex and just touch on the currency futures. So before we get started, make sure you smash that like button, subscribe to the channel, and any questions or comments, please leave them down below. Um, I do have a Discord channel, which I don't honestly promote, which shows because there's very few people on here. I mostly just use it for myself. I post a lot of screenshots to myself with notes. But if you guys want to join it, if you go to, I can leave a link for it in the description. But if you have Discord and you're interested in joining it, you can just search Futures Brizio, and this is the icon here, which is the same one that's on my YouTube channel. And go ahead and join it. And it's a good place just for discussion. You can see that I did take a withdrawal yesterday. Not a ton of money, $2,000 though, on one of my Forex funded accounts. There, you can see the certificate showing right there. So, anyways, just wanted to point that out and just make you aware of the Discord channel. Okay, like I said, I can leave a link for it in the description too. It's a great place to have discussions and post content and pictures and ask questions. And so I'm going to try to make another effort to at least remind folks about it. Okay. So that's for you Discord users. So jumping into the markets, I do have one grain trade open, which I took a very late entry here on the hourly chart off this support area. The market's probably not going to do anything. I'm going to hold this for the weekend because I do think overall corn is still quite bullish, at least up to, even if you go out to the daily chart. I think there's not really much to stop it here. If it can break through the current resistance level, I think this will go higher. And from a standpoint of commitment of traders, we are still quite bullish on this market. So, anyways, just wanted to point that out. We had pretty much the same entry earlier today on soybeans right here. The market is going down right now. And we also had it on wheat, pretty much the exact same entry this morning when the market opened. I didn't take any of those. I was really concentrating on my Forex and currency trade. So, but I just did want to point that out. These markets all still look fairly bullish, although wheat is a little concerning just with this pattern. So, but just moving on to currencies. Actually, let's go over to Forex. So as you guys know, I've been using this uh, currency strength index right here. I have two instances running on my chart. I have this one here, which has a 21-day look back. This only shows up on the shorter time frames, like the 4 hour. I don't really use the 1 hour for this, but if I'm looking at potentially looking at a 4 hour entry, this is the 21-day look back. If I go up to anything from like the 10 hour and above, it's going to turn this one off. And I have this other one here that has a 7-day look back. It's the exact same indicator. It's just that it's only looking back at 7 um, at a 7 period look back instead of, up to 100 candles instead of 21. Okay. And so if I'm looking for an entry on a shorter time frame, like a 4 hour, I want to have the indicator be a little bit slower so that it gives me what I think are more quality signals. But when I go up to a higher time frame, I'm going to shorten the look back period from 21 to 7, which is what you see here. Um, because on the longer time frame, um, I don't need to have it so long because it would miss a lot of good entries. So I can have a shorter look back period and still have it generate pretty good signals. But if I'm deciding, well, today I'm going to use the 4 hour chart, maybe I got more time to spend, then I want that look back period to be stretched out a little bit because it filters out a lot of junk signals. Because this indicator uh, does give a lot of junk signals if you're not careful with it, but it gives a lot of really excellent signals too. And just again to reinforce, this is a currency strength indicator, and essentially it plots the strength of the two currencies. In this case, this is the Canadian Swiss currency pair. You can see up here in the top left. And the blue line always represents the second currency in the pair. So in this case, the Swiss franc. This orange one represents the Canadian dollar. And essentially, I'm looking for periods where they either cross over, like a steep crossover, where one crosses the other one, or where they come together and then repel off each other. And I always use the magnet theory. Those of you that used to, if you ever used to play with magnets when you were a kid, I don't know, I'm probably dating myself, but if you take two magnets and you put the two plus sides together, they'll push. You'll feel them actually push off of each other. Or if you put the two negatives together, they'll push off to each other. And so if these lines come together and then deflect off of each other sharply, that's also a signal. So in here, you can see this is the 10-hour chart. So this is the shorter look back, the 7-period look back. You can see like this signal right here. If we zoom in right here. So this, again, the blue line's the Canadian, is the Swiss dollar. You can see this sharp cut through, and then you can see what happened, that started this uptrend. All right. So on this time frame, using this look back, there's no current trade because you can see the lines are not near each other. So like I said, I don't trade this in a vacuum. I like to trade it in the direction of the trend, preferably. And here's that where they kind of come together right here. So if you look at this signal right here, okay, we had the blue and the orange kind of come together and then deflect off each other. So they didn't cross. They basically deflected. So this kind of represents a pullback on the chart. And then they deflected away from each other very sharply. We had, again, the Canadian dollar, which is the orange line, go up, and the Swiss franc line go down. This is an excellent trade. That signal actually occurred right here on this bearish candle, so that could have been an aggressive entry. If not, then certainly on this next one. And you can see it went up for, a few days after that before now pulling back again. So that's how I use this. Again, I don't use it in a vacuum. I prefer to use it in the direction of the trend. In this case, this is a great trade because this is a long entry. Okay. And, this was kind of like a sideways accumulation zone. And then all of a sudden, boom, right here, we had this sharp crossover and the buyer stepped in, clearly big money at this point, stepped in and shot the price up. I mean, just look at the size of these candles that pulled out of this consolidation zone. So this is very typical, like accumulation area where big money's kind of setting up for something, in this case, a big up move. And the indicator kind of told you, give you a lot of confidence to trade this. And of course, if you looked over at the currency futures, which is, like I said, I like to use these in tandem. So this was this was the market open on March 1st. So if we go over here and we look at the Canadian dollar and the Swiss franc currency futures. Okay, so let's find March 1st here. This is this is the Canadian dollar. And you can see right here on March 1st, price is still going down, okay, and then it bottomed out and had this big run up. So they're not always in tandem because, again, these are futures. But that crossover on the spot Forex market led to a good trade. It took a couple of extra days for it to play out on the futures market, but right here it bottomed out on the futures market and we went up. So you wouldn't necessarily have traded that at the same time if you trading the futures, the currency futures. You wouldn't have necessarily taken that March 1st trade because it didn't really it wasn't really indicating. But you can see 2 days later, on March 3rd, we got this big tail, big wick on this candle, and the price shot up. And then, of course, the opposite would be true on the Swiss franc. We actually did get that move. So remember, I showed you on the currency pair that the Swiss franc diverged away bearishly. Well, here it is on this is the Swiss franc currency futures. So this is just looking at the Swiss franc as a currency future, not a Forex pair. And you can see there's March 1st. You can see down at the bottom, there's that sharp move away that we saw. So what I'm saying is I could have taken two trades here. I could have taken the long on the Canadian Swiss and a short, in this case, on the Swiss franc futures. Both would have been good trades. Okay. And then here's that second re-entry trade that I showed you on the Forex pair. Okay, going back to the Forex pair where they kind of diverged away from each other. That would have been another entry on the Swiss franc. Okay, because it's the same date. All right, coming down here. Okay, so if you trade only Forex, then that's perfectly great. Then you can just use it on Forex pairs. But I like to use the indicator to kind of give me setups, not just on Forex, but then jumping over to my currency futures and saying, okay, do I have a trade in one of these as well? And a lot of times you're going to, as you could see here, you didn't get an initial trade on the CAD, on the Canadian dollar, but you did get it a couple of days later, but you did have it at the exact same time on the Swiss franc. So there's two trades right there on in two different markets, one spot Forex and one currency futures. So like I said, if you don't trade currency futures, if you're only a Forex trader, perfectly great. I mean, I've been focusing a lot more on Forex because of that indicator. But whenever I see a setup, I do jump over to my currency futures chart and look for potential opportunities there as well. Okay. But like I said, I prefer for it to be in the direction of the larger trend. And that's just, smart thinking. Now, of course, you can always take counter trend trades, but just I would just say if you do that, keep your expectations and your take profit levels reasonable, knowing that if the larger time frame is still bullish, like in this case, the Canadian dollar is bullish. We kind of have a pretty clear market structure right here. So as long as we remain above here on the higher time frame, this is the 10-hour chart. So 10-hour daily chart doesn't matter. You can clearly see this general structure area right here. Here it is on the 12-hour. All right, then we're in a bullish stance. So we're pulling back now. And so that's when I will, again, if this uptrend is going to continue, at some point we'll probably see these two lines come back together again, deflect off each other, and then again see a sharp bend down in the Canadian dollar, and then a move up. I mean, in the Swiss franc, and a move up in the Canadian dollar. That would help you point to a continuation. If we see a sharp crossover between these two, where they sharply cross, one slices through the other one very vertically, then that could indicate a change in direction entirely. Okay. So that's how I use this currency strength index. And this indicator has been calculating very slowly today for some reason. Usually it's pretty quick when I change assets or time frames, but you can see it's over here calculating this. And I don't know why it's taken so long. It's been really bizarre. Why it's taken like 10 or 15 seconds to show. But anyways, so if we look at again something like the Aussie Canadian, okay, we can see right here. So again, in this case, the blue line's the Canadian dollar, okay, and we can see we had right here, we had a crossover, a sharp crossover with the Australian dollar cutting above the Canadian. And you can see that led to this sharp move up. And now we had this crossover back down the other way. That led to this move down. Okay. Now you can look at this and say, well, we're still in a bullish trend, I would say overall. I mean, although we hit some significant resistance up here, but we kind of have this market structure sitting here. So this move down was actually a counter trend trade, but it's just an example. Okay. This is what I wanted to highlight. Okay. Although again, I don't have my live. Okay. That's good. You can see here, we had, this happens sometimes too, where you've got them moving in the same direction after a crossover. In this case, I usually will not take these trades because I want to see them diverging in opposite directions. Those provide the most volatility and the most movement. You can see right here, this is the pound Aussie crossed over the Australian dollar line, and the price did go up, but you can see it didn't, kind of ran out of steam. And now we have them both kind of pointing downwards. So what I would like to see now is to have these if this was going to like form a new uptrend, I'd want to see these two come together, which they pretty much are right now, and then have the the British pound one start to bend up and again that magnet theory, right? The when you put two magnets together, the two positive poles together, they reflect off of each other. Okay, so that's something I can look at here. I can also look at this on a shorter time frame and we don't have a crossover yet. So this is the 4 hour chart. So now we're looking at a little bit longer look back, a 21 period look back. And you can see once again, these two things have come together very tightly, but it does look like this market's trying to turn and go higher. So again, what I'd like to see here eventually is to have the British pound, which is the orange line, kind of start slice through here and definitively start moving up while the Australian dollar line bends downward. Okay, but right now they're together. It's also Friday, so there's the market volatility is pretty much dried up for the week. I don't anticipate anything's going to happen, and so we'll just see these. But this is one that's on my watch list for a potential next week if this uptrend continues. It is a potential area where there could be a long. I mean, we are still theoretically in a downtrend here. So again, this would be a counter trend trade at this moment. As we look at the daily chart, we've got some clear market structure right here. So you can say, well, just don't even bother even taking this trade, unless we break structure and have this thing start going long above this level. But like I said, you could take a counter trend trade. Um, Based on this, just understand that you're fighting a downtrend, a pretty strong downtrend too. So just be aware, or you just ignore these up signals until and if and until and when the market structure changes on the higher time frame. Okay, so even though I could say I might be looking for a long here, that's still not as good of a trade as looking for a long, for a short, for as long as the this bearish market structure holds on. Okay, I mean just look at like one other one here. This is the New Zealand dollar, Japanese yen. This is another good one. This is the 4 hour chart again, 21 period look back. Look right here, a very sharp slice. Now, granted, the entry's a little bit late here. You're about 3 candles into this downtrend, but still, it's still going down, and these things are still diverging from each other. So even if you got in a little bit late here, this is still a good trade. And this market was kind of consolidating. So I mean, this is really an early entry trade here because if you're looking at the higher time frames and you see all this consolidation, you might not even really be willing to take this trade. But it is a good trade. And as it turns out, because you can see it would have gotten you in uh, at a pretty good place. All right, so let's look at it on the higher time frame. And here it is on the 10 hour, and we pretty much get the same entry. We get the entry. Obviously, this is a different time frame, so the candles are going to encapsulate more time. So the signal came on this 10-hour candle, but the price is still going down. You still would have been in this trade profitably now for about 2 days. And you don't necessarily have to be, going for home runs on these. I mean, if it turns out it starts making substantially lower prices and you can hold it, then great. But, I look to hold my trades anywhere from, 1 to 3 or 4 days. So, and I just basically just go by the price action and look at any key levels it might get stuck at. And obviously, if these lines start to tell a different story. So again, I wanted to just kind of point out these two markets. I am currently short the Australian dollar and the Aussie yen on my funded accounts based on these two markets right here. So if we look at this is the 10-hour Australian dollar chart, and this is really frustrating with how long this thing is taking. I'm going to have to talk to my developer. I didn't change anything in here, so I'm not really quite sure why it's taken so long for this to generate these lines, but it is. But as you can see here, Australian dollar short, there's this really sharp crossover that happened on Wednesday, and price has been heading down since. And if you were in this short and you were looking for a management place, of course, we've got some pretty strong lows back here on the higher time frame. We've got a couple more here. It doesn't mean it's going to stop there, but if you're just looking for management areas, Those are just very obvious areas that stick out, just key areas where prices bounce from before, you know, at swing lows, swing highs. Those will have an effect. It doesn't mean they'll hold. Price could just bounce along and then slice right through it. But just so I'm not saying, if you're in a short to exit here, but it's a management area. Maybe you exit there, maybe you just trail your stop down so you lock in some of your profit, whatever. So that's a signal there. And then the Australian dollar yen, this is a little bit more recent. Here we are on the 10-hour chart. This entry was yesterday, and again, a little bit late, but certainly heading down. Okay, this is still a counter trend trade, so this is one I'd be a little bit more careful about holding long term. Okay, we do have key support and swing low down here on the daily chart. So that's one that, maybe you have realistic expectations. I mean, it could come down here and start a new downtrend, bust right through here. But like I said, just beware that it is a counter trend trade. I'm aware of it, and I'll manage the trade accordingly. But I probably will hold both through the weekend, which is a little bit risky, especially with conditions right now, in the Middle East and everything. But for now, I'll hold them. And then if we look at this one on the 4-hour chart, um, then we can. And again, I don't know why this is taking so long. As soon as this video is over, I got to reach out to my developer. But you can see here on the 4-hour chart, this crossover happened. This was basically a re-entry because the initial entry for a long was up here. We really didn't get a signal to go short on this first leg down, but we did have one here on the basically on the pullback right here. We had this entry, and so again, just being realistic that we do have support sitting down here. Let's see what happens as price works its way towards these lows, if we're able to exit or stay with this trade down here. But if I am short from here, again, I'll manage this accordingly, but I'll have a realistic target probably sitting back somewhere around these lows, and then I'll see what happens after that. But that's essentially how I'm using this. And again, in this case, this would have suggested a short in the yen. Okay. So if we go back over to our currency futures, here's the yen, and here's that same candle. And, the yen has been in a downtrend. You can clearly see the market structure. We gapped up higher, but it looks like now it wants to roll over and go down again. So again, that could have also been a short in the yen. I didn't take the short only because I don't like this gap in the chart, and I just rather not deal with those gaps. So this may be a missed opportunity, but that's why I didn't take the corresponding futures short here in the yen because of the gap. And I also did not take it on the Australian dollar, although clearly that was a miss because you can see the Australian dollar is moving down. Again, this chart looks very much like the Aussie yen currency pair. So the going back and forth between the markets does take a little bit of time. And so I tend to just end up concentrating on one versus the other. But again, theoretically, there was a trade in both markets on the Aussie yen short and a potential short on the Australian dollar. And so there you go. So, all right. So, yeah, so I'm going to leave it there, short and sweet. Any questions, comments, leave them down below. If you'd like a little bit more information on using the currency strength indicator, let me know. And again, guys, join the Discord channel. Just go into Discord and just look up Futures Brizio group, and you'll find this, and I'll drop a link to it in the description too. So have a great weekend. Smash that like button, subscribe to the channel on your way out, and I hope everybody has a great weekend, and we'll talk to you soon. Thanks.